Obviously, quarterly disclosures in the US for the SEC. Tell us a little bit about how you're going all the way from the local tax provision all the way through to reporting in the US, and how you're using CCH Integrator to help facilitate that.
So CCH Integrator has been probably a revelation for us in our business, in particularly for Australia. We have 4 trading entities at the moment, and grouping those, we have individual grouping items that are reporting back. So we're able to perform a bottom-up approach where we have the entities all feed in the information out of SAP. We've reduced lead times as well, which has been fantastic. One of our subs in Sydney, they used to take about 4 hours to do the entries.
Yep.
And that was part of using the old Thomson's product that they had.
Yep.
And it just seemed a fairly lengthy sort of process to be doing entries at that sort of point 4 hours later.
Yeah.
They're now down to 30 minutes.
Wow.
From there. My review times have been reduced as well, so
Yep.
looking before, will take normally about an hour to review.
Yep.
I'm down to about 5-10 minutes now.
Fantastic. So what are the key points that you're reviewing?
So if we look at some of the reports that come out and generated from TI, typically we would look at the deferred tax asset and deferred tax liability reports.
Yep.
In there are built-in checks that you can look straight away to see whether you're in or out.
Yep.
In terms of your review. As you're going across those sort of reviews items, the operating profit tax note is a good point as well. It gives you a good listing in terms of what your permanent items are. And the TA summary complements all that as well. So it gives you the basis where you can actually see what unreconciled differences you have.
Yep.
So you meet all those criteria, and if you actually work through that process and have it all set up correctly and methodically within the trial balance, you shouldn't have any issues moving forward.
Great. So the same software and the same process is then both feeding your domestic tax provision journal requirements, but equally is being used to report through the US. So tell us a bit about that process of how do you get the disclosures that are relevant for the US tax consolidation?
Yeah, that's a good point. So having, I guess, the opportunity or the luxury of actually creating different folios for different reporting gives you that basis. So you can literally do a local reporting provision, basically setting up a folio for that you would use for the whole year, and that would be for your local GAAP reporting that you have, your tax return as such, and then extrapolate that into a US GAAP, virtually mirror, but with the gap to gap changes that you have or the differences that come out from the reporting tool. And then that gives you that basis to actually then complement what adjustments you have. And at the same time, you can also then have a look in terms of what your tax return is doing for local into US GAAP as well. So you keep it pretty consistent, and you get to see what those changes are, and then you can actually make recommendations on it fairly quickly, and also determine any walkthroughs that you might have to discuss with my boss or anyone else that asked a question. Even our auditors as well, they will typically come and want to find out what's happened gap to gap.